And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. As always, this is the show where we show you where the action is in the broader markets. And that rotation we've been talking about here recently is continuing to shape up a bit. We are going to take a look at areas of the market that are continuing to weaken relative to areas that are coming into favor. As always, it's with an eye toward helping you uncover where that relative strength is so that you can participate in that strength. And then equally important, if we see continued weaknesses in areas and industries that are coming under selling pressure, you want to make sure you're not overweighted in those areas. But first up, let's take a look at some of the news that drove price action last week. We did get some very key inflation data closely watched. First up was Consumer Price Index, CPI data came out earlier in the week, and surprisingly, it came in above estimates. Now, I will tell you, on that Wednesday, investors were rather nonchalant about that report that came out. We did see an uptick in interest rates a little bit, however, also on Wednesday, we got very strong numbers from heavyweight software name Oracle, which did give those AI names a boost, hence the counterbalance relative to that high inflation. As the week progressed, on Thursday, we got further inflation data, PPI, Producer Price Index, that also came in above estimates, and that was enough to, in fact, have the markets pull back. We'll get into all of that as we move forward. Also talk about some of the groups that are going to be more heavily impacted by interest rates, both to the upside and the downside. Also, we did see retail sales numbers coming in, and they did post the largest increase since September. So we are seeing continued strength there with this recent earnings season. We're seeing a bit of wobbliness in the group, but overall strength in some of these retailers. And next week, the Federal Reserve's meeting, FOMC meeting, will take place. Most important there is going to be on Wednesday with the Fed Chair Powell's speaking and giving comments as far as what was discussed and their outlook on interest rates. So be on the lookout for that. From here, let's go ahead and take a look at those markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500. Now, this broader index really was flat for the week, but it did decline just enough to get this index back below that 10-day simple moving average. I'm on the lookout for this 21-day next area of possible support. We can see we had this pullback in late February where it continued to find support. We will want that, of course, to take place at this time because this next key area is the 50-day simple moving average, and it is quite a distance below. Also, key is going to be staying on top of these momentum indicators, RSI above 50, trending lower, but still in positive territory. Likewise with the MACD. So this support coupled with those momentum indicators keeps the S&P 500 in a confirmed uptrend. A little bit of a different story with the Nasdaq. It was down 0.7% for the week. We did close just below that 21-day simple moving average, keeping an eye, of course, on that RSI. It is very close to potentially turning negative. Also, when you're looking at these broader markets similar to individual stocks, pay attention to that volume. If we see high volume on days where a given index or stock closes in the lower range of its trading range on that day, and you also want to keep in mind those momentum indicators, it will be very telling by way of considering that to be distribution. So let's go ahead and look beyond the broader markets. We want to stay on top of these bigger, broader sectors. So we're looking at the 11 S&P 500 sectors, and I've gone ahead and added an RSI indicator, sorted the sectors in relative strength, RSI, and it's a 2-month daily price chart view. And let's take a look. This is not the first week that energy is up here at the forefront. XLE, a couple of factors this week having to do with supply demand issues, less supply in oil. And then also Ukraine did go ahead and bomb some of the oil refineries in Russia. So a couple of factors there as to why we are seeing energy move higher. We'll take a look at the price of oil in our next segment. And then I will share with you a couple of stocks. It's an area that can no longer be ignored. So first up here, also at the forefront, we can see basic materials, financials, and industrials. So these tend to be cyclical areas of the market that are continuing to bubble up to the forefront. We also want to be aware of that relative weakness. And let's take a look. Technology down here in that lower quartile again this week, down 0.8%. You can see waffling around at that 50 with the RSI. Now, when you're looking at these sectors, it's going to be critical to be aware of the heaviest weightings, particularly when looking at tech. Let's take a quick look at XLC. And both of these are areas that have mega cap, formerly known as FANG stocks, at the forefront as far as their holdings, taking up as much as 40%. With tech, it's going to be Apple and Microsoft, but there is weakness elsewhere. We'll get into that as we move through here. But overall, we can see that there is a bit of movement with healthcare losing super near term its uptrend here with deterioration and then a momentum with this MACD trending downward. Let's go ahead and move through, take a look beyond these broader sectors and really get your arms around strength relative to weakness beneath the surface. First up, XHB. This is the Homebuilders. And really what you want to note here is the fact that the group was up here at the forefront, up about 0.5%. But this is in a rising interest rate environment. In other words, investors are more focused on the growth outlook. In my MEM Edge twice weekly report, we have the top performing home builder, and it remains in a nice uptrend. So let's take a look. We talked about interest rates on the move higher. This view with these ETFs also is relative, so strength to weakness. And here we are. This is on Thursday's PPI report. You can see we're looking now at the yield on the 10-year Treasury. So we did see an uptick throughout the week. We are now standing at 4.3% on that yield. And I've mentioned many times that 4% level is a benchmark. We were very close to dipping below that, but not the case over the last couple of weeks. You can see the momentum shift here taking place, and higher rates not good for the broader markets. And most notably, one of the more negatively impacted areas is going to be software. This is IGV, the software ETF. And I talked about Wednesday's Oracle earnings pushing the group higher. We had another heavyweight name that reported today. I'm going to share that with you because you do want to be aware of it. Big heavyweight software name, but also AI related. So we can see software back in negative near-term downtrend. Also of note, IWM. And this particular area, this is small cap stocks, had been holding in really quite well. But this week, down 2%. We can see this momentum potentially shifting negatively. This is one indication of a more risk-off environment within the broader markets. Let's take a look at another area that can be very exemplary as far as investor confidence, risk tolerance. And here we are with IBB, the Biotechnology ETF, coming under selling pressure, breaking key support. Another indication that investors are pulling in their horns a bit here and taking a bit of a more cautionary stance. And like taking a look at other areas, semiconductors pulled back last week. This was a very mixed group. Overall, however, down 4%. Among these, Nvidia was able to withstand that. We're going to take a look at Nvidia. Let's go ahead and do that right now, and then I can cycle into some of these other key areas I want to share with you. But what we are looking at with Nvidia here is the stock holding in relatively well. And we all know why. They have already announced their growth prospects, new products, and they are pretty much the clear-cut leader in the semiconductor space. And we can see, despite a pullback, a dip below this 10-day, their momentum is still very much in positive territory. Do a pause, because those of you that have not potentially gotten into the stock, this type of view here, of course, is ideally when you want to enter. This turnaround took place in the beginning of January of this year. I highlighted it to my subscribers as we were coming out of this period of consolidation into this nice uptrend. So ideally, we're on the lookout for a nice period of consolidation, even a bit of a pullback before we can see Nvidia resume its uptrend. Of note is on Monday, Nvidia is going to be holding their annual conference, and it will be all about AI. There will be some keynote speakers as far as other companies. So from here, I will share with you one of the presenters that Nvidia, it's a company they are invested in. It's a small cap name. If you're not aware of it, I would say keep your eye on this name, SOUN, AI related voice recognition tool. And you can see that the stock has had a very good week. It was up 52%, and that could have forgiven a lot of sins among some of these other names that have pulled back. But it is still very much in an uptrend, and they'll be speaking at that conference next week. Now, from here, what I did also want to share with you is a closer view at these mega cap names, because we are seeing a bit of waffling as it relates to those that have been in the forefront and are moving down into this weaker quartile here. We just reviewed Nvidia. Let's take a look at Microsoft. They had a good week this week relative certainly to the markets and elsewhere, up 2.5%. Yesterday, we saw this nice base breakout, nice MACD crossover. You wouldn't know what was going on elsewhere. They are going to be speaking on Monday at the Nvidia conference. And then moving down through these areas that have been weak, of note is the fact that Alphabet came back into its own last week. It was up 4.3%. We can see this black line up through the red, indicating a possible new uptrend. I will want to see that MACD get up above that net neutral area and remain above this key 50-day simple moving average. And that, from my work, would confirm that Alphabet has in fact entered a new uptrend. One last area I do want to share with you, actually a couple of things that you can very quickly get to with Stockcharts.com. This is that initial interface page, and I know each of you are going to have it set up a bit differently, but already set up here are various views relative to, in this case, the various equity markets. And we can also take a look at yields with this view on the bond green. We talked about the yield on that 10-year increasing. Let's take a look at crypto, because it has gotten hit. And this is another indication of a risk off appetite. And from here, what you can do is highlight any of these given cryptocurrencies, click this chart, and you will see a view. Now we're looking at a daily. Most of the damage, if I may, for this week was today. It was down almost 5%, but you can see that we were in an overbought position. And as long as we are up here at this forefront interface page, I'm going to share a couple of other items of note. And I've done this in the past, where when you're looking at, in this case, I have the S&P 500. Today, those names that were up the most on the S&P. And just a quick glance, if you're familiar enough with the broader markets, you'll see a bit of a theme. STLD, NUE, both metals stocks. And we're going to take a look at STLD, and we'll get back to this list again. So what I wanted to highlight to you here is STLD broke out of a base today. And the reason is because STLD pre-announced their earnings. They're looking for a relatively strong quarterly earnings and sales. We can see this MACD crossover, but take a look at that volume on that base breakout. The stock definitely appears to have more upside near term. Keep your eye on that entry point. It is a bit stretched, but let's go ahead back to our view here and also take a look at another stock here that is up here at the forefront, actually two different names, and that is ISRG and WAT. Again, on the lookout for themes. We talked about metals. These two stocks are in the medical products space. Intuitive Surgical, of course, the robotic surgical device team, and you can see this nice move back into an uptrend. And then WAT is also another medical products stock that had pulled back very orderly to its 21-day simple moving average with its momentum staying positive. So that is the kind of activity that you can quickly uncover with very simply looking at those names that are up the most. But let's take a look at the opposite. And this is something you'll want to do. It takes a matter of minutes because this too will provide hints and clues as to potential group movement. So let's look here at the forefront. I talked about that major software company came out with earnings, dropped almost 14%. And this is Adobe Systems, ADBE. And similar to Oracle, the advance periodically, this is going back to when Nvidia had that big explosive move. They did have some wonderful products that are AI driven relative to their graphics, but take a look. Earnings, big drop, huge volume, and had everything to do with competition relative to one of their primary products. But these kind of moves will then permeate elsewhere in the markets. I showed you what happened to the software group overall. And then today, some of those related names that are in AI. Let's take a look at another big decliner, and that is Jabil, JBL. And it is indicative of what we've been seeing elsewhere, where stocks that are what I call price for perfection, sitting up here at a high, come in with numbers that are not perfect, and the stock declines down 16%. From here, I'll share with you a couple of other names because oftentimes that are in that same group that sold off in sympathy, and that is a common occurrence because investors are going to suggest that you will see deterioration elsewhere in the group. FLEX, a direct competitor of JBL, and this stock had already been exhibiting weakness up here at highs, and this is what did begin last week. We have any number of names. I'm just going to segue out to a different group entirely, but Modine, a lot of these names that were up here, and some of them are recovering from their pullbacks in a very orderly way. You want to keep your eye on that RSI, but not so with the names such as FLEX. And then when a competing company comes in with weak numbers, the really RSI turns negative and is poised for further deterioration. I did mention energy stocks, so we'll take a couple of minutes here to take a look at some of the areas in there that are acting the best. And I'll show you a name that has already come out of the gate, if I may. And this is FANG. Diamondback is the name of the company. This gap up into a base breakout has everything to do with the company's merging and purchase of another energy company, which now puts Diamondback as one of the largest pure plays for those Permian Basin energy providers. And you can see it's still in a very nice confirmed uptrend. So from here, we can segue into other energy stocks that are also looking constructive and in that same Permian base. Actually, this is Phillips 66. They are in a different space, but let's take a look at the chart because what we have experienced here is a nice 2-week base breakout into an uptrend, very nice high volume shaping up there. And then one last name that we can take a look at, well known in the energy space, and that is ConocoPhillips, COP, gapping up, all about that supply demand that's taking place, and then also the increased price in oil. From here, I did fail to share with you a view of the price of oil. I use this BRENT crude, and you can see that we're up here at the 85 level, which is relatively elevated for that price of oil. So you're going to want to get more refined in your search than simply those that respond closely to the price of oil and get more into the dynamics of some of these companies. And that's where I come into play. That's what I do with my work. So I also wanted to share with you in the semiconductor space names that faltered the most. And first up is MRVL. They came out with their earnings last week. Another example, priced for perfection up here. And the company disappointed a little bit, but management was very bullish on growth in their AI division. The markets looked the other way. So when you see this break below that 50-day simple moving average coupled with a negative RSI, oftentimes you can see and be on the lookout for further deterioration. This recent low here in late February is going to be your next area of possible support. So we can keep an eye on this stock as a proxy for those other semiconductors. And everyone, that's it for this week. I hope you have a fantastic week. And if you haven't already, use that link below for a very low price trial of my twice weekly MEM Edge report. We're going to get much deeper into these markets, see where we're headed, provide areas of support and resistance, and make sure you're on top of these names that are poised to outperform. Have a great weekend. See you here next week.